it visible now?
Yes, it is visible.
Okay. Okay. So yes, welcome all to the call, investor call for Kundan Edifice Limited. Thank you all for joining. This is something that we have prepared. I would just like you guys to also have a look at it as we speak about it. So to begin with, these are I'd like to begin with the performance of financial year 25-26. So as you would know that in this year, financial year 25-26 is the first time that we have crossed the 100 crore mark in our revenue. So that's a milestone for our company. So this is one of the achievements. And along with that, what all we have done during the year is something that I would like to take you through. So this year we have done a lot of work in our R&D and development and launched quite a lot of products, product categories in the lighting segment and in the power supplies. So we have been working on these over the last few years, maybe you can say roughly around 2 years. And in FY25-26, we have launched these products. Those products, you can see I mentioned over here, launched Neon Flex series and Advanced Gang Driver series. With these products, we have also onboarded a couple of international clients, which has you can which if I tell you is given as an opening to the international markets, which we were not doing earlier. So that's something which is nice. I mean, we have started getting a lot of we have started getting a lot of inquiries, and we have started reaching out to a lot of international clients with the kind of R&D that we have done over the last 2 years. Now it has put us in the likes of certain international suppliers who are catering to the international markets. We've also developed a new series of products in facade architecture, furniture, and the specialty lighting applications. So this is just a company overview, the journey of how we started in 2010. The company started and how the journey has been till 26. This is about our management. It's me, then Mr. CFO, Mr. Mahesh Singh, and our second director, Ms. Malika Gupta. I'll just skip through all of this, please, and straight get you to. Okay, so I think so. Yes, so I'll tell you. So this is what is our primary business. This is what we do. We do OEM and ODM manufacturing. And as you would be aware, we work with majorly all top Indian companies in the country, with the likes of Havels and Philips and Panasonics and Wipros and gold medals and GMs and all of those. These are our primary products that we manufacture, in case people who are there on the call who don't know. So this is just a brush through our product portfolio. These are called flexible LED strips, strip lights and rope lights. So we were the first ones in the country to start manufacturing these, and right now we are one of the pioneers doing a decent job in this space. So these are all the products. You would have seen these products being used in your households or around you. So this is what we primarily do. These are various kinds of products that we make. So the applications, these are the kinds of applications that these products have. You see it on building facade, you see in your houses, you see in outdoor applications, and so on and so forth. So now with all of this, with the work that we have done in the past and the kind of R&D, like I just told you, that we have done over the last 2 years, in this year in FY25-26, we have seen a lot of, I mean, a decent, I would say, engagement with international clients. Like we've onboarded 2 or 3 of our international companies, and we are soon going to start business with them. We have done with all the formalities of tender registrations and approvals and sampling, and these are all tedious processes which go on for 6 months, 8 months, and so we have done that. And in terms of that's some of the new collaborations that we have done, and this has been possible because of the R&D, like I said. So in our R&D, right now the company, like I explained earlier, has been into OEM ODM business model. But now the company, and it was focused on, like, lighting for generic application for household and other such applications. But now the company has developed products for application specific lighting. So to give you an idea about application specific lighting, so we have developed products for, like you can see over here, the facade lighting. So what goes into the facade lighting is very different from what goes into general applications. Facade lighting involves products like these flexible wall washers and neon flex. So these are the kind of products. Then we have made products for wardrobe, kitchen cabinet, furniture application. So these are the this is one of the picture, like where you can see how product goes into wardrobe and kitchen and these kind of furniture applications. So for that we have developed aluminum profiles, which we were not doing earlier. And with along with that, we have made products for submersible underwater application for swimming pools and waterfalls, and for refrigeration business where there is extreme temperatures, extreme cold, extreme humidity. So those are the kind of products we have done, and we are seeing great response from all our clients. So this is all the work of this has all been possible because of the R&D that we have done as a company. Since we are one of the leading manufacturers in this space, all the people in the industry look up to Kundan Edifice in a certain way, that this is a company that will come out with innovative and new products for versatile applications, which is not being done in India. So that's something that has been uh, very good for us. So this is something which I would like to highlight. This is our strategy for growth. So this is how we focus and we build onto our business is operational excellence through modernization. So all of the work that we are doing, we kind of try to, since we are hard in predominantly in manufacturing business, we try to work on operational excellence, like kind of have the best throughputs, the best machines, the best automations, how we can incorporate the latest technologies. Right now the company has in the midst of implementation of SAP modules. Now company is also has initiated certain AI based training programs for its employees, so that that we can be up to date with the new tools and working efficiency. So we try everything possible and continuously work on our operational excellence through whatever new tools are there, and with the change and pace of modern business. The second key pillar that I would say is our curiosity and our development, which always keeps us busy with uh, developing new product and new product lines. Like I just explained about the kind of products that we have done. So these are all products which are in the similar territory of our core business, but with a different angle of application based lighting, which makes the life easier for all of our customers. One of the biggest challenges that we face, or we have, it's not a challenge really, but like what we have come across in dealing with all of our clients is that they expect us to also tell them that how the product is going to be used, where it is going to be used, and create a value proposition for our customers and make it ease in usage of the product. So that's how we realized that okay, now we have a scope of making products which are application specific. Other than just home applications and generic application, this product has got a very versatile application and can get into newer spaces. So that's what we keep on doing. Our team continuously works on it day in day out. It takes us maybe a year or 2 year to develop a certain range of products, and then we can put it out in the market. So that's a activity that we keep on doing continuously, and we keep on diversifying into new product lines. So there are many more things that would be coming in future, but I've already given you a glimpse of what are the new things that we have done. Geographical expansion for customer growth. Now we realize that there's a strategy which is in place for our Indian market. The kind of work that we are doing currently with our clients, and plus with this application based lighting that we have just launched and we are growing into it. We also realize that we cannot limit ourselves to the Indian markets, and now our vision is also to grow into international markets. And I can proudly say that that we have collaborated with two companies, with third, which is almost on the verge of closure, where we will say that we are working with three companies, and we have got a good vision of what we can do further in terms of our geographical expansion. So that is the third key aspect that we have in place for our growth. Fourth is strengthening our OEM and ODM capabilities. Now, since we are reliable partners for a lot of our customers, working with them over the years, now we are also in talks with our clients to look at possibilities of other products which we can do for them as a OEM ODM partner. And one of the very good examples for that is the best business that we are planning to venture out into, as I've mentioned over here. So, for people who don't know BESS is battery energy storage system. Okay, wait, I think we have got one slide over here also for this. Yes. Battery energy storage system. So battery energy storage system is so in a layman language, what I can tell you is it's like a power bank. It's how you use your power bank for your phones and your laptops. It's like a power bank, but at a bigger scale, at a bigger level. Now with the Indian growth story, uh, and manufacturing and infra expansion and all of that, so there's a lot of growth that is happening in the country. With that growth that is powered by the overall energy consumption and energy requirement of the country is expected to grow by three times of what it is today in say maybe next 5 to 6 years. So it's expected to grow three times. So with that kind of a drastic growth, or that kind of a demand that is there, there's a lot of upgrade that needs to happen in the overall energy ecosystem. And one of the very important factors for that is energy storage, because now with all kinds of renewable energy or the conventional energy generation work that has happened in the country. So there is right now there's a lot of energy generation that is happening, but this energy needs to be stored. So there is not enough infrastructure for storage of electricity. There's a lot of electricity that is getting wasted because there is not enough electricity storage. So that's what we are, as a company, Kundan Edifice has plans to venture out into battery energy storage system businesses. Now these have the battery energy storage system business is a very vast subject. So I've tried to cover a couple of things over here, that what are the kind of revenue options that are there. One is doing OEM, ODM for current FMEG companies that we are working with. So we are in talks with some of the companies for OEM, ODM of best solutions who are already into with our company because they're already into appliance industry. And these are some other revenue sources that are possible going ahead in future once we are able to uh, get into the best business with small steps, like get our foothold in the industry, and then probably there are other options that can be explored. That is, one is CNI business, where so CNI business is corporates and industrial clients where they have requirement. So a good example for that would be any factory which has got a solar rooftop, but they are currently using generators in case of power outages. So that is where best solutions can come in. Then there are societies which have, or corporate parks, or so on and so forth, where there are generators being used and where there are solar rooftops being put in. So their best is a kind of a complementary product that goes in this. So that is the second space where BESS is has its uses. The third is at the government level, where the government has very big initiatives. Like you would have all recently heard about the world's largest renewable energy park coming up in Gujarat, in Khavda. So where there is such kind of electricity generation, they also require battery energy storage system. So in a project like that, uh, there was just it was in news the other day. Adani Group has set up the largest energy storage infrastructure out somewhere outside China. This is the biggest project outside China which is of that scale. So that's been set up in Khavda. So you can maybe probably understand the kind of scale that this business has. There's also a model where energy as a service, where uh, where people are deploying BESS and where the power outages are more. It's where it is being done in a leased kind of a model where energy is being provided as a service. So this is just a glimpse of what is possible in the BESS business. So this is we have just started some work in BESS, and hopefully we will have more to say about this in coming future. I would also like to highlight these are some of our competitive strengths and moat, uh, that how Kundan Edifice stands out differently as compared to its competitors or maybe peers or the new people coming into the industry. So one is that since we have been in the industry since more than 10 years now, we share a very deep and enduring customer relation. Like we said, now it has come to a point where our customers see us as one of the reliable OEM ODM partners in a way where they are okay and open to discuss with us about business above and beyond the lighting industry. The kind of clients we work with, they are the top companies in the country, FMEG companies, so they are not limited to lighting. But as a company, Kundan Edifice had always been limited to lighting. But with the kind of developments we have done in the past and the kind of serviceability we have given our clients, now our clients look at this or want to look at this relation beyond over above and beyond the lighting industry. So that is one of the strengths that we have. Like I said, we keep on focusing in innovation, and there is always a constant focus on R&D, and we are always working on what new, what next, what is it that we can introduce to the Indian markets, like what is happening globally, and maybe we can introduce to the Indian markets. And at the same time, we also are also trying to showcase to the world about the capabilities of Indian manufacturing, and that is how we are being able to get on board some international companies to procure their requirements from India as compared to China, which would be the first choice of these European and American companies. So I think that's a very interesting space that we are also experiencing right now, where we see that there are a lot of opportunities, and how we can make the best of it. So again, like I said, that we have got 10 years of experience as a company. We have got 10 years of experience in this space. But as in terms of our team, we have got people who have been in this industry, in electronics industry, in lighting industry for more than 15 years, 20 years, 25 years. So as a team, we have got a very good team who has got the expertise in this domain. Again, I'd like to say about our manufacturing capabilities. From our manufacturing standpoint, we have tried to design our manufacturing in a very what do you say, modular manner, where we know where how we can increase our manufacturing capabilities within a very short span of time if required. We have done that in the past. If you see the company's track record, at one point in time we were doing 100% year-on-year growth, and that was only possible because of those manufacturing expansion capabilities and having designed our manufacturing in a very modular manner. But over the last 2 years, our focus has majorly been into how we can come at par with international companies, and that is why our innovation, R&D, and development of new products had been our key has been our key focus in the last 2 years, and probably I think that we are seeing some results of that. Again, we have a strong track record of good financial performance, as you can see. So these, I would say, are some of our key competitive strengths. One thing, then this is what we have here. I think these are the financials. I'm sure you guys would have seen, so I will not get into the detailing of this. I don't know if anyone has visited our factory or no. So this is just a visual. This is our manufacturing facility. This is based out of Mumbai, Maharashtra. It's a 140,000 square feet carpet area where we are producing around 45 lakh meters of these LED strips per month. So it roughly converts to around 5 crore meters per annum. This is only the strip. Plus now we have, like I said, now we are doing power supplies so that we have scaled up to around 20, 30,000 pieces a month, which we intend to take up to 2 to 3 lakh pieces a month. Then also within this facility, we would be doing our application based lighting, like I said, for furniture application, facade application. So all of it is under one roof. This is what we have been working on over the last 2 years and created a manufacturing unit where everything, all the quality control, right from the input stages to the output stages, added many production processes, many new technologies which we've introduced in India for the first time in terms of manufacturing capabilities. Those products were coming into India in finished goods, but we are one of the first companies to have added those processes in India in terms of the manufacturing. This is again a small glimpse of our factory. These are the kind of clients we work with. So I would, and to summarize all of this, I would like to, come to the point where we are right now. A vision that the company is working with is Kundan 2.0. So that's the vision, our vision for 2030. So here is a glimpse of what the company aims to do till 2030. So like you can see, we have segmentized into many categories where we are predominantly again keeping a focus on our OEM ODM business, which is our core strength. So over there we intend to take our business up to around 225 crores with whatever we are doing with the current clients and adding new products and everything. So that is what we aim to achieve. Then in lighting projects, so this is again a very new space. Maybe you mentioned it earlier, so I will just tell you. So we have started a small division for project lighting. So project lighting is very different from OEM ODM business. So ODM business is where we make products for other people in their brands and we do it. Lighting projects is where we take up projects, either private or government or infrastructure related projects where like just like uh, Ram Mandir happened in Ayodhya. So doing a lighting for a project like that, or you have the Mumbai Valley Sea Link, or you have any monument or something, or like a building facade. So this is project lighting business. So which is a different model as to what we do. It has got more of designing and showcasing your skill of what you can do as a lighting company. So that's something that we are venturing out into, and we are currently actively working on some inquiries. So hopefully we will be able to close them soon, and we will see some kind of conversion happening and growth happening in the project lighting business. And with the kind of growth story that India is driving on, we see that the project lighting business doing roughly around 100 crores per annum would not be a problem till the time we reach to 2030. Till then, we'll probably it's not like we'll do this in one day, but eventually maybe we see that this year we will add some business to project lighting kitty. Then next year maybe do some more, then some more. Eventually by 2030, this is the kind of regular business in project lighting that we hope to do. Then we have exports and linears. So linears is again those furniture lighting and all those kind of things that is there. So here like I said, we have now signed a contract with Hettich. Hettich is a German company. It's famous for its kitchenware and modular furniture and everything. So we've been approved as their global vendors for supplies and lighting. So we see that that is one very big opening that's come our way. Plus we have signed a contract with one more company, and we are about to finalize with another company as well. So we see that there is good potential in export business. This is the kind of business that we hope to do by 2030. That this will be like a stable annual business by the time we reach 2030. And then there's the best. So best we have tried to keep it at a minimal because it's a very new space. Whether out of all the four revenue streams that I could showcase you in best, this is a very small number compared to what is possible. But since that is not our domain right now, and that's something very new that we are trying to do, we have been very what do you say, conservative in thinking of what we can do in terms of this. So yeah, the growth levers for this is international collaborations and exports, make in India, sell to the world. Like I said, product portfolio expansion, power supplies, LED based architectural systems, application based lighting verticals, furniture, architectural, project lighting, niche trade and e-commerce expansion. So yes, so e-commerce is also something that we are exploring. uh, we see that there's a lot of scope in there, but that's something which is a little of a seasonal business that we see when it comes to e-commerce, because that's during the festivals there's a lot of buying that happens in e-com channels. Otherwise the e-com in India is not very aggressive, but we see that there is a good future, so we might also start some work at e-com level. So this is overall. So this is our vision of 2030 Kundan 2.0, and with this we are also coming with a new identity with a more global relatability. And as you would know that we have also done our name change. So for this Kundan 2.0 vision, we have also decided to change the name of the company to Wisdom Technosis Limited. And soon I think the company is going to be recognized by the name Wisdom Technosis Limited, or all formalities, paperwork, and all and everything is underway. And I think that will be there out soon. And along with this, as we are now, it's been our journey on in the financial markets has been now around roughly around 2.5 years. We got listed on the SME exchange in September 2023. So we look forward to starting taking our journey to the getting our company listed on the main board. So maybe within next 1 year is that is something that we intend to do. And this is our overall vision for 2030. So I think I've tried to cover everything. Yes, I think this is all I had to say.
Thank you, Mr. Devansh, for the information. That was quite comprehensive. Okay. The information given might have contained some forward-looking statements about the company. So these are based solely on the beliefs, opinions, and expectations of the company as on date of this call. And whatever questions that may come up might also contain these. So keeping that in mind, let's proceed with the Q&A round. Okay. So since now the call was on a listen only basis, but now we will be shifting to the Q&A, wherein participants will have to raise their hands one by one, and the team will allow them the mic access for that. Okay. Due to time constraints, we will be only taking two questions per person. Then the person would be sent to the queue again. Okay. And I hope your coordination. Thank you.
Sounds good.
Mr. Vinod, the team has sent you the request to unmute if you want to ask the question.
Yeah, thank you very much. I thought it was an excellent presentation, Divyansh, and also we can see that you, as an early mover onto this integrated manufacturing capability, you're making a first move that is really fascinating to see, and also your growth potential. It is really evident. One thing which I would like to see is you said the export potential that most probably will be coming from some cost effective manufacturing, and especially when you are having your supplies from, and this is my understanding, supplies from China. How you'll be managing this since, say, an exporter may be choosing for a direct import from China, rather why they should come to you? Is it because of any innovation what you're having? That is what is there in your mind to have this optimistic view?
So to give you an idea, when we started work, our imports used to be around 75 to 80% of our total purchases. Now our imports are around 50% of our total purchases, and which we are actively working to get it down to somewhere around 30% of our total purchases. So that probably we'll achieve in next 2 years, and we are going to reduce our dependability on China to a great extent. Now, for the balance 30% that we are saying that we are dependent on China, we are hoping with the kind of ecosystem that the Indian government is creating with all these semiconductor chip manufacturing coming up in Dhulera and all those plants coming in. So we hope that in next 2 to 3 years we'll have a solution for that. But and it's not only about lighting; it's about all electronics, the kind of ecosystem. And I don't know if you've ever seen the kind of ecosystem that China has developed for this kind of work, but the entire world is kind of dependent on certain components to coming in from there. But having said that, the government policies make it very easy for Indian manufacturers to be able to be competitive at the export level, because the materials that come in from China are the raw materials are don't attract any kind of custom duty. Finished goods coming in from China attract a custom duty for imports, that is for the Indian markets. For exports, where does India become better? I'll tell you why are people, what I have experienced, like right now we are engaging with people in the Middle Eastern space, and we're engaging with people in the European market. So now there are a couple of reasons why is because China is producing for the world, so they are not very open for the kind of customization that is required to cater to the global audience. Right now, whatever they were producing, people are buying it because that's what is available. So that is one thing. Second thing, that the Indian manufacturing is somehow apparently a little cheaper as compared to Chinese manufacturing. There, the minimum wages and salaries, vagera, and all of those things are kind of have gone up multifolds than to what it was earlier. So, with these reasons, plus they are also looking at an alternative like China plus one kind of a solution, which makes it easier for us. So, as a company who does not have any kind of global presence, having maybe even if we can take 5% of the market share of what is there globally available, which China is supplying, is a very big number, and 5%, 2% also is a very big number. And we are actively seeing that we are engaging with people and they're keen to buy from here. And the prices that we have quoted and the work that we're doing, we are kind of at par or rather better in some cases with compared to China. So I don't see that as a problem.
Excellent. Thank you very much for that, and all the best for you. And just to add one more on the inland customers, especially you as an ODM. Now I can see you said about the supply chain integrations and the customer relationship what you're having. Now, if I ask you how difficult will be for your uh, the companies to replace you, what will be the switching cost for them? Is it so difficult for them? What kind of relationship you are having, since you are looking for a forward number, that is, I think you said to 25 crores by 2030. So how confident you are on this switching cost for
So
your partnership
we have
companies?
we have had these experiences in the past. So it's a general trade practice. When you work with someone for a very long time, there are two things that happen. Either you build up so much confidence that you don't want to change your supply partner, or sometimes you feel that okay, we are too dependent on this supply partner. Let's have some options open. So so in the first case, it is always very good for us where the companies, our clients, they have that kind of a confidence where they only want to work with us because there's a certain comfort. In the second case, there have been instances where people have said, okay, oh, let's look at alternate options within India because there were many other people who were trying to come up within the same space. But what happens is when you're working with these corporates, there is an entire ecosystem that is working. It's not a single person driven work. So with any client, it's not just one person from our team who is interacting. There are the production guys who are interacting with their supply chain team. Our sales guys are interacting with them. Our R&D guys are interacting with them to create a product pipeline of what all developments are going to happen in this category in 3 months, 6 months, 1 year. So there is that kind of a trust that is getting built up. Okay, at the management level, we are interacting. Quality guys are interacting, ensuring that how our quality is superior and what the kind of work that we're doing. So when there is such a kind of engagement that there are at least 7, 8, 10 people from both organizations interacting with each other, so it gets very difficult to create that kind of a what do you say synergy with any new supply partner. It's not like it's impossible to have a new supply partner, but that relation that is built with so many stakeholders, it is not easy to recreate that again. So
Thank
it's
you.
yeah.
Thank you, Divyansh. Thank you very much.
Thank you, sir.
All the best for your future endeavors. Thank you.
Thank you. Thank you. Thank you.
Thank you, Mr. Vinod. That was quite helpful. Okay. Now we have question from the line of Mr. Subramaniam. Okay, I think he's writing on the chat that what is the capex requirement for BESS? Okay, and he also wants to understand that since we are a micro cap company, so what is the expected EBITDA margin from this segment, and isn't it unrelated expansion? Expansion, okay, from the perspective of micro cap company, and he's also saying that, and it's always better to be more strong and expand in our core area than to divest.
I get it. So we are not planning to we are not planning. So the best business that we're talking about is not a very capital heavy So we intend to begin in that space by having have a technology tie up with certain international companies and get SKD solutions and probably just do the assembly part of it over here and start providing solutions to our customers. That's the first goal. It's not something that it might require working capital. There would be requirements of the working capital and maybe some smaller capexes. But I think this is a move that we are planning to do from a long term perspective. Uh, to have something a different space, a different opening for the company as well. Because the power sector in itself is very big. So I think if this is so, we are trying to take a small step to get into a very big sector. And if this works and the way we are anticipating, if it works, it will give a multiple X result or return to us. So it's a very well thought of move that we're trying to do and with minimum risks or negligible risks, if I may say.
Mr. Subramanian, if you have a follow-on question, we could take that as well. I think he's done. So next question is from Mr. Ashwini. He is asking which international markets are offering the biggest opportunities for Kundan.
I think Middle East, but it's in the last 3 months, it's a little slowdown because of this war situation. Otherwise, we were working very aggressively with the Middle Eastern market, or we were in very aggressive discussions and very forward discussions which were going on. And I think that is our focus also because it is very close by geographically. To reach out to the American markets and European markets, geography plays, the distance also plays an important role. Having said that we are going into international markets, but serviceability, you can begin with something which is nearby, and then maybe expand something going ahead. So currently we are in talks, like I said, like we have onboarded Hetek Germany. We are in talks with a company based out of UK. There's one more company who we are in talks with based out of Italy. So we are seeing some positive response from the European side also, and that is something that we are evaluating. But Middle East we see this is something which is very doable, very easily doable.
So Ashwini is asking when do you think it can improve?
These are conditions which are beyond our control. The war is beyond our control. How the geopolitical situation is and how the dynamics are is beyond our control. We don't know. We are seeing some kind of stability which has already come in. It's not like earlier there was a different kind of a scare where people working in the Middle East, they were all leaving the Middle East, going flying back to their respective countries and everything. Now at least we are at that point where we see that a war is not escalating, and it has come to a point where it is mellow and it is uh, seems like there would be an end to it soon. But if there's an end to it soon, then the conditions will improve instantly. Then there is no problem because Middle East has a lot of expansion plans, especially the Saudi. Dubai is anyways a tourist space. They are what do you say? Uh, they are doing a lot of expenditure in development of tourist attractions and everything. So I think it can. It really depends. We are hoping that it should be soon.
Ashwini, do you have any more questions? If you want, my team can allow you mic access as well, so that you could ask directly. Ashwini, why don't you try with your microphone? My team has given you access.
Am I audible?
Yes,
Yes.
you are audible.
Yeah. So, Surya, I want what is the single most important strategic decision which the management is planning to execute over the next 24 months? So that this,
I'm losing you in between, Ashwini. I
what
can't
is the
really.
strategy? Can you hear me now? Am I clear?
You in between. You are clear. Sometimes I'm not
Okay,
able
I
to
think
hear.
there is an internet issue, but let me just try.
But please
I want to
try again.
know what is the strategy which management is planning to execute to improve the sales for in next over 24 months.
So the strategy that we have used or we are deploying to improve our sales is that we have created sales verticals and we have put people for as category heads. Like we have
Uh-huh.
someone who has come in as a category head for the furniture and retail lighting. We have someone who's come in as a vertical head for project lighting. We have someone as a vertical head who has come in for power supplies. We have someone who is probably going to be coming in for expansion of a product portfolio in e-commerce. So we are deploying people like that. Can you just give me a minute?
Yeah.
मेरा एक VC चालू है, मैं आपको एक जरा 10 मिनट में करता हूँ कॉल. Hello.
Yes, sir.
Yes. So we have put people as category heads, and we are seeing the results of that. We have not put all of these people, but we have put two, three people, and for having a focused marketing
Mm-hmm.
in these categories, and we are seeing that early the kind of people that we didn't know that these are the kind of clients that we can even work with. Okay, our
Mm-hmm.
focus was always working with these top FMEG companies in the country, but now when we are working in verticals, in different kinds of verticals, we didn't know that there are so many modular furniture manufacturing companies in the country. Now we have at least 20 companies that we are actively talking to, who we see that can do good business with us, and they all require lighting for the furniture that they are making in their factories. So it's not
Okay.
some project business, it's something which is a what do you say, a factory which they are already buying this material. They want solution.
Understood.
Yeah, so
So now I wanted to understand how is your order book now? Is it good? How is it
yes,
looking?
it is good. It is compared to the previous years. Like we didn't generally we expect every year we see there's a little slowdown in April and May in the beginning of the year, but this year May we were not really expecting. We got orders and how, and we were struggling to execute those orders in the month of May. So so the order book right now looks pretty strong. We
Okay.
with this cost increase and everything also it is quite strong.
Okay. So how is your order book for the future too? Is it looking strong?
Sorry?
How is your order book for the future too? Is it looking strong?
Yes, absolutely. Yes, yes.
Okay. So the net profit should increase from now is
Sorry,
what we are planning for.
I I
Will
I,
the
I can't hear you.
will the net profit increase from year?
Yes, yes, that's what we're working for.
Yes. Okay. All right, sir. Thank you.
Thank you.
Thank you, Ashwini. Next question is from Mr. Rohan. Okay, Mr. Rohan, why don't you try to access the mic to ask the question directly? Mr. Rohan, are you still on the call? Okay, then let's move on. Next question is from Mr. Ramakrishnan. So, Mr. Ramakrishnan, I request you to try to access the mic.
Hello. Hello.
Hello.
You can hear me now?
Yes, we can hear you.
Yeah. Thank you, Divansh, for a wonderful presentation.
Thank you.
Thank you for your efforts. And I think that your move to enter into bus is a very tactical move. So you
Yes.
have any plans to enter into other states for the bus expansion or best projects? Other states other than the existing states to Tamil Nadu, like states where the wind power generation is more.
Yeah.
So you have any plans to expand to those kind of states?
So we'll be doing business pan India right now
Okay.
for best. So Kundan Edifice is getting into a technical collaboration with a company who has been and made some indigenous solutions. So we are collaborating with them, and we will soon probably we'll let everyone know about it. But we are collaborating with them, and that's how we are getting into best. So it's not like we are going in blind and not knowing anything or not having any industry experience. So when we say that, when we have such a team who has got industry experience, we will be going. It's not limited to any state.
Okay.
We'll be working pan India right now. In the southern states, we have a company called VGuard. You would know VGuard is based out of Cochin, and they are doing inverters and stuff, and all of this. So this is something that goes. It's a complementary product that goes along with it. We are in talks with them also if we can offer them OEM solutions for BESS. So when we get into this, it's going to be pan India. It's not limited to any state.
Okay. Thank you.
Thank you, sir.
Thank you, Mr. Ramakrishnan. So next question is from Mr. Subramaniam. So I request you to kindly unmute your mic. I think he's having some issues. Let me just read his question then. He's asking what is the expected growth percentage in sales for the current financial year, 26-27?
See, at least I think we'll be looking at around at least around 25 to 30% growth is what we have in mind for the current year.
There is another question from Ashwini. She wants to know what percentage of revenue comes from the top 5 clients.
Top 5 clients, I would say around 60%.
Next question is from the line of Mr. Raja. I request you to kindly unmute your mic.
Yeah, hi, Divyan sir.
Hi.
My question is when we will start seeing the revenue from BES and ODM projects and export.
The export we'll start seeing in this year only, in 26-27. Uh, and project lighting business here, as I said, that we are already in talks with a couple of projects already we're working. So hopefully we should be able to do that. And we are quite sure that it will happen this year only. BES, I'm not sure if we'll do some revenue this year, but we have initiated. We intend to. We want to really have like a foot in the door and get the ball rolling in this year, in this financial year. So maybe I'll be able to tell you that in the second half of the year, uh, with a lot more clarity. But the intention is to have it within this year.
I think that was it from Mr. Raj. Okay. Next question is from the line. Mr. Raj, do you have any more questions? No, I think that's all it is. So next question is from the line of Mr. Tejas. I request you to kindly unmute your mic. Anyways, I will read his question then. He wants to know how do we see our EBITDA margins going forward? Also, can you highlight the margins in each segment in the projects lighting, project lightings, BES, and export business?
So the best business, I am not really sure right now if I can tell you anything about it right now. But for the project business and export business, the margins are better than our current the work that we do currently, and that's one of the reasons why we venture out into those businesses to have better profitability for the organization.
Mr. Tejas, do you have any more follow-up questions? Okay, so let's take up the next question. So it's from Ashwini. She wants to know the downside. Okay, so what do you believe is the biggest risk that could negatively impact shareholder wealth over the next few years?
I didn't get the question really.
She wants to know that from the investor's perspective, okay, and from the perspective of an analyst, what is the downside in the business? Okay, specifically, what is the biggest risk that could negatively impact shareholders' wealth over the next few years?
So the thing that we see that could really impact or could work negatively for us as a business is any drastic change in the government policy. I think the current government has made the manufacturing ecosystem uh, quite nice, and the policies that are there is for the manufacturing sector to thrive. Till the time there is political stability in the country and the policies remain same to what they are right now, I don't see any challenge like that. Uh, yeah, I don't see any problem like that. There's nothing which I see is working adversely or working negatively in any aspect right now, other than the government policies or this geopolitical scenario of this war and all of this. Other than that, there's nothing.
Ashwini, do you have any more questions for this? Okay, let's take the next question then. It's from Racha. He wants to know how will you fund the growth towards FY30? Okay, through equity, debt, or through companies' accruals?
Through a combination of all three.
Okay. Raj, do you have any more questions? I think that was it from him. Let's take the next question from Mr. Rohan. He wants to know that given the ROE and ROCE of the company are upwards about 20%, so how do you think about capital allocation going forward? Okay, means balancing capex for capacity and R&D, potential inorganic opportunities, and any initiation of dividends or buybacks over the next few years.
We are in talks. We are evaluating internally about dividends. There have been discussions of buyback also. There have been discussions of some inorganic growth like acquisitions also. We have spoken to two companies where we see that the synergies can form, and that probably where we can take up majority stake in those companies, which can add to inorganic growth of the company. So yes, there are talks that are going on. There is innovation and development is something that we feel that we have to constantly keep our we have to deploy our capital in that space, because I think that gives us the edge over all other companies. And that's so one of the things that are, people that come to us, they say that we look at you as a company who's always going to be coming out with newer technologies and newer offerings. That's only possible if we keep on deploying capital in development. We can't just be looking at doing the same work today, that we're doing today for the coming years also. So we have to keep innovating, reinventing, offering something new to the industry. That's how I see it.
Okay, thank you, Mr. Devansh. Mr. Rohan wanted to ask the question directly, but actually he was suffering from a sore throat. So no worries, we would
Problem.
have the question next time from him directly. So let's move on to the next question. It's from Shreya Nambia. They want to know, can you throw some light on the R&D, and is it reverse engineering? How much is your R&D spent last year, and what is the average qualification of the R&D employee?
So when we talk about R&D, so I think we are doing more of design and development, not R&D. R&D per se is a very deep subject. We are not into R&D of materials, or we are not spending, or we are not researching something new, and we are not deploying. People with R&D budgets can be crazy. It can be in millions of dollars. So that's not what we are doing, which which bigger companies do. We are doing more of design and development, you can say. So we have got decently qualified engineers. Maybe the packages range anywhere between uh, 8 lakhs per annum to up to 30 lakhs per annum. So we have at least a team of 3 4 people within this range that who are working with us. We have got junior staff also, like executives in there, or interns working with them. We have a few people who we on and off take services from, who are professionals, who we take on project to project basis. We take inputs from them. Then we work with some of our supply partners. So I think the best way how development also happens is by closely working with your suppliers. What they teach you about the product or what they teach you about what can happen is no one else can teach you. So we work closely with those suppliers, like how we do it for our customers. We tell them, okay, so this is what you need to do, this is what you need to change, this is what needs to upgrade. So that's how our team is works very closely with our suppliers to keep us well informed of what are the kind of changes that are happening at our suppliers end, and then in turn what is the kind of value proposition that we are creating in the entire supply chain.
Shreya, do you have any more questions in this regard?
And the reverse engineering part, which Shreya asked for, is like, we try to, when we say, when I earlier in the call, I mentioned that we try to introduce products in the Indian market which are working globally. So we see that Indian market is a very, very typical kind of a market where people want to experience the best of what is available in the world, but there is a little price sensitivity factor which the Indian consumers expect. So when we see something which we feel will work well in India, we have a saying in our organization, okay, let's try to Indianize it. How can we Indianize it? When we say we can Indianize it, is that is when we get into reverse engineering. We understand the product, what are the features that the product has to offer which is working globally, what is the Indian consumer mindset, what is it that they would require, and we try to engineer the product and balance it out in as per Indian customers requirement from all angles, right, from quality, the features of the product, the pricing, to everything. So yeah, these are standard practices. These are, I think, in all domains when you talk about design development, research and development.
Thank you, Mr. Devansh. So due to time constraints, we will be taking one last question. Okay. So next question is from Mr. Tejas. He wants to know what was the capex in FY26 and what is the capex guidance for 27?
So capex in 26 was not too much, I guess. Capex. I don't think we did too much capex. I would not know the exact number, but there was not no major capex which was done in 26. And in 27 also, we might not look at any kind of major capex, because the capexes that we have done in 25 is something that is now converting into business, or we are seeing that getting converted into business now. So to if we see so we created certain capacities, like I told you, those neon flex products and these new categories and these GAN power supply. So these are infrastructure that we created in FY25, and those are not being, for those particular product capacities are not being fully utilized. And now when we see growth in that business, if we see that we see exponential growth there and we need to add build in more capacities to fulfill the incoming orders, then maybe we'll do. But I'm hoping that in this year 26 27 we will have to look at a capex within the range of 5 crores, like anywhere between within up to 5 crores at max, because we are also planning to do certain automations in our manufacturing unit, which where we see there is, that we, one thing that we constantly do is how we can reduce manual labor and how we can get it more into automation and be future ready. So with those things, and with if there are new product, the demand for new products which we are anticipating is going to be quite high, we'll be probably deploying capital over there.
Thank you. I said last time that this was going to be the last question, but I think we have so this would be the final last question. No problem, Ashwini. If Ashwini wants to know, if you had additional 100 crores available today, where would you deploy the capital? When do you think we can pay dividends to clients, and how is the shareholder going to be benefited?
So, if we had 100 crores today, we would probably acquire one or two companies, which would have given maybe for around 20 crores or so, maybe acquire two companies, and which would have given inorganic growth of at least 30 to 40 crores of 30 crores of revenue instantly, we would have done that. We would have invested some money in BES. We would have invested some money in expansion of our current products, and we would have invested some money in the products which are like this facade lighting and this project lighting kind of work, certain infrastructure that we need to do there. I would say that we would, for inorganic growth, we would have acquired 20 crores. We would have bought out a couple of companies. We would have done around 15 to 20 crores worth of capexes, including BES and our current manufacturing facility and all of that, and maybe 50 crores or so we would have kept for working capital for the revenue to drive to power that revenue growth. That's how I see we would have done that. And dividend, yes, sure, very soon, very soon. I think we will be able to tell you that, maybe not right now in this meeting, but I think very soon we'll keep everyone informed that we'll be probably distributing dividends. And we see that we work majorly to create value for our shareholders. That's what has been the idea. uh, uh, we want to create value for everyone in the entire ecosystem, all our stakeholders, right from our customers to suppliers to our employees to all our shareholders to our banking partners to for everyone. Uh, I think we'll our actions will show that very soon.
Thank you, Mr. Divyansh. Due to time constraints, we will have to take a hard stop, okay, for today. Thank you for being patient and cooperative, everyone. I now hand over the conference to the management for the closing remarks. Over to you, sir.
So thank you so very much, Financial Minds team, for having this organized very well, and thank you everyone. They were very interesting questions, some of which even made me to think about a few things. So thank you all for joining and for all of this. So I think if I had also mentioned this in my last meeting, last call when we had, is that that Kundan Edifice as a company is not here for the small game. We are here for the bigger league, and I hope we were able to give you a glimpse of that today and show you that what we are intending to do. And I think now you know what to expect from the company till 2030, and we'll keep delivering on these, and we'll keep we'll keep you informed of what the company is doing, and we expect support from all our stakeholders. Thank you so much, all of you all, for joining.
Thank you, everyone. On behalf of Kundan Edifice Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you once again.
Thank you.